Welcome to the ReachX podcast. Today we are with Karl Hersvik, who is the CEO of Aker BP and has been in his post since May 2014. It's an interesting conversation to have with him because it's a digitally innovative oil and gas company, and he can give a total perspective on it because he's been at the forefront leading those changes. But before we go on to your digital innovations, let me ask you the first question. You have a very unique ownership structure that a component of your ownership is also traded on the Oslo Stock Exchange. So what can potential investors expect of you?
Yeah, thank you. Well, the ownership structure is such that Aker, which is an industrial ownership, has 40% of Aker BP, and then BP has 30%, and the rest is listed. That means we are deeply exposed to the entire value chain from an IOC high competency and technology environment all the way to the vendor industry. That gives us a unique insight into the oil and gas value chain and a unique access to competency across that value chain.
What is your current production level? And of course, you're a keen propagator of digital technologies. So where is the current production at, and how do you expect digital to optimize your operations going forward? Let's talk about, let's say, the next 3 to 5 years.
So the current production level in Aker BP is around 160,000 net to the company, and we operate around 320,000 barrels gross. We actually believe that it's our strategy is to lead the digital revolution, and I use that word for purpose of the oil and gas industry. And we believe that the digitalization, whether that's data availability, contextualization, use of machine learning or artificial intelligence, will actually improve pretty much every single element in the oil and gas industry. You'll see higher productivity, more automation, more data usage, shorter times from starting some work process like a discovery until you have production. It will fundamentally impact pretty much everything we do.
Finally, from a market perspective, how do you balance the ongoing oil market volatility versus your future plans?
Well, I think the key word here is cost per barrel. So Aker BP has been focused on a strategy to reduce cost per barrel dramatically. And by that we mean both the cost per barrel in terms of the barrels in production, but also cost per barrels for the yet to be produced barrels. Currently, we're saying that we do not sanction projects which don't have a break even at $35 or less. That means that even with the current volatility, the business is really, really robust. And last year we generated $2 billion of free cash flow, even if the oil price was quite bumpy.
Thank you very much for your time, sir.
Thank you.